Welcome back to Thailand Focus 2013. In the morning session, we went through the opportunity to invest in healthcare and tourism sectors in CLMV countries. In the afternoon session, we'll begin with the panel discussion on banking sector reform in Vietnam. The panelists include Mr. MacCana, Ho Chi Minh City Securities Corporation, Mr. Pham SSI Securities Services, and Mr. Stephen Punch, Director of Risk from KPMG. And our moderator is Mr. Therapong Vachirapong from Phatra Securities, who won the Banking Sector Analyst from SAA Awards in 2012. May I now invite all panelists together with our moderator on the stage to begin the session. Please welcome.
Just want to welcome all of you and good afternoons. Welcome to the Vietnamese banking reform. I think you know that the banking system is very important to emerging market, and good banks mean a good economy. So I think it's very important to understand this very clearly. Now we actually live on. We actually have people on the ground, actually flow from Vietnam. We actually have two prominent brokers here, Managing Director from SI and also Ho Chi Minh Securities. And we also have one view on the consultant, KPMG, where we actually share with you in terms of the what's going on in the Vietnamese banking system. I will start with you with Steve, in terms of the landscape and the developments, basically.
Thanks, I just want to run through a few details and developments within the local Vietnamese banking sector. I think Vietnam is one of the most overbanked countries in Asia. We have 40 Vietnamese. Sorry, I'm just going to go back one. There are 40 Vietnamese banks and more than 50 other foreign bank branches. Half of the local banks have foreign strategic partners such as Bank of Tokyo, Mitsubishi, Mizuho, or Commonwealth Bank of Australia, and BNP. The sector is undergoing rapid regulatory change, but the regulator uses enforcement very inconsistently. The average annual credit growth from 2004 to 2011 was 33%. The average NPLs, official NPLs, is 4.67%, but there is a lack of transparency on this data, and unofficially these rates are much higher. There has been strong deposit growth over the last 2 years with very high interest rates. The VAMC, the Vietnam Asset Management Company, was recently established to try and resolve the NPL issue, but this has been slow on the uptake, and the VAMC is considered to be undercapitalised. There have been recent banking scandals where senior executives from some of the top banks in Vietnam were arrested for certain financial violations. Only 15% of Vietnamese individuals have a bank account. There is very poor but improving risk awareness and risk management. Corruption may exist at all levels across the banking sector in different processes and different functions. Clearly the biggest problem in NPL is the NPL issue in Vietnam, and the second biggest problem is how to make sure the NPL issue doesn't happen again. I just want to talk about the number of Vietnamese banks. At the end of 2011, the Prime Minister mandated that the SBV should try to have only 15 to 17 banks by 2015, local banks. As I said before, Vietnam currently has about 40. At the time they had 42. So there's been very little progress, just a consolidation of 2 banks or 4 banks into 2 other banks and reducing the number of banks by 2. So I think this is a very aggressive target to have 13 to 15 banks by 2015-16. In terms of some of the consolidation, that we've seen across the sector. You can see there on the left-hand side, these are the mergers that have taken place, the mergers or tie-outs that have happened. But in fact, these only represent 10% of total lending within the sector. The 4 big banks in Vietnam, which are majority state-owned, BIDV, Vietinbank, Vietcombank and Agribank, represent more than 60% of total lending. And there has been interest, in fact 2 Japanese, Mizuho and Bank of Tokyo Mitsubishi, have taken an interest in 2 of those banks. But in terms of actual sector consolidation on a total assets or lending basis, very little has happened, and we're expecting that over the next couple of years there will be a lot more consolidation from the bigger banks. It's probably no surprise that credit growth is a necessary ingredient for strong GDP numbers. And you can see that over the last 10 to 12 years in Vietnam there has been very strong credit growth. As I said, between 2004 and 2011, you can see here the average credit growth is 33% across the sector. That's now dropped to about 10%. Last year it was 8.91, and for the first half of 2013 it was 4.91. So it's about 10. Credit growth is about 10%. But the government has been very keen on reducing very high inflation numbers, which in 2011 were running at 22%. So interest rate rose and credit growth suffered as a result. I talked about the NPL rates. We've got on there the actual reported NPLs on an annual basis going back till 2006, which shows a very moderate increase. And then we have some numbers there in the top line which actually show what the unofficial or unreported NPLs might be. There's a massive difference because of the way that Vietnamese banks are required to report for NPLs on a very unsophisticated basis, which is on a days overdue basis, rather than bringing in any qualitative factors to credit assessment. This chart just shows that the effect of that unofficial NPL could well be to wipe out the capital at just about all of the Vietnamese banks. The sector is going through a huge amount of regulatory change, and the State Bank of Vietnam has announced that over the next 4 or 5 years it wants to bring in a Basel II type risk-based supervisory approach in Vietnam. And given that NPLs are clearly the largest problem in Vietnam, this is the area they need to focus on in terms of capital adequacy and credit risk capital adequacy. This is actually from the Standard and Chartered 2011 annual report. This is their Pillar 3 Basel reporting. And it says that for capital requirements for Standard and Chartered, 81% of their capital is designated to credit risk, with the other 19% designated for operational risk and market risk. So if a bank is going to get any one of these wrong, it doesn't want to get credit risk wrong, because this is the one that consumes most capital for the bank. No great surprise, but something that the State Bank of Vietnam really needs to make very clear to banks who are very undercapitalised already. These are the ratings that Moody, S&P and Fitch give to Vietnam as a country, and also for individual banks. Only listed banks and a couple of other requested banks that have requested ratings agencies to rate them for various reasons exist in Vietnam, so only a handful of banks are rated, and this is, as you probably know, below junk status. I think that's probably all I have to say as an introduction and the developments recently in the Vietnamese banking sector. Thanks.
Thank you, Steve. I think you have heard, Steve's very straightforward, assessment of what's going on in Vietnam. So you can see lots of issues and challenges, and definitely that's require a significant banking reforms. So he has come, Mr. Fiachra is actually going to talk about what we should expect in terms of banking reform in Vietnam. So please,
Right. I got the easy part, which is to talk about the challenges and issues that we're facing probably over the next couple of years. I think let me divide it into sort of three main issues. One is just to cover a little bit more ground on the NPLs. And I think that this is one of the issues that Vietnamese banks and the authorities have really struggled with over the last couple of years, because there's a huge amount of daylight between the top-down numbers, which have been published principally by the state bank itself, the supervision department, and then the numbers below, which you can see are basically the monthly summaries which each bank themselves submit to the state bank. The state bank's job then is just to aggregate those numbers and come out with basically the total. Now, as you can see, the top-down estimates, and unfortunately we have nothing in 2013, the latest published top-down estimate comes from around June of 2012, but we were estimating, or the SPV at that point was estimating that NPLs were around 10%. Now, on the other hand, if we look at the bottom-up numbers, which have been compiled by the banks themselves, we can see that as recently as May 2013, they were estimating a number around 4.8%. Now, there is a significant amount of daylight between the two numbers, and I think it's also fair to say that the top-down number, which was guesstimated by the supervision department at the SPV, in itself is a very rough estimate. All they did, basically, was they took the bank's own reports and they redesignated loans which had been made to from more than one bank to the lowest category that one bank had put it in. So let's say one bank had said, okay, this loan to this corporate is in Group 3 or Group 4, and then another bank had it still in Group 1. They just redesignated it to Group 3 or Group 4 also. So, in other words, even the top-down estimate is a very rough, very crude, and certainly does not capture the full amount of NPLs in the system. Now, we've done our own kind of rough estimate and come up with three different scenarios. One which is basically the best case, where we estimate NPLs around 15% roughly. The other one, which is the most likely, where we estimate NPLs at around 19 or 20%. And then the worst case scenario, which may still be a little bit too optimistic, who knows, but where we estimate that it's around 25%. Now, taking the most likely case, which is around 19.2%, and running it through the system, and assuming, according to the SPV, that 54% of those loans have a real estate collateral, and then probably another 25% or so have other collateral, and then the balance have zero collateral, and running through some various scenarios, we came out with our concept that effectively, assuming a 40% recovery rate, that we would need recapitalization in the region of around $15 to $18 billion, let's say over a 5 or a 6 year period. Now, if we take last year as a guesstimate for the amount of provisioning that banks are doing at the moment, we can estimate that they are roughly able to provision around $3 or maybe $4 billion a year. So in crude terms then, and let's not forget that the bulk of the NPLs are loans made by state-owned banks to state-owned corporates, so the private sector problem is much less, but let's leave that aside for a moment. We estimate that it will take at least 4 or maybe 5 years worth of consistent provisioning at a rate of $3 or $4 billion a year for the banking system as a whole to begin to emerge from its problems. Now, it's very clear that the government would like banks to do most of the heavy lifting themselves. It is also clear that banks themselves will only provision to the extent that they can make profits at the operating level. So in other words, if a bank has $500 million worth of pre-provision profits, it's probably going to have around $450 million worth of provisioning. No bank wants to declare a loss if it can, and the government will not encourage banks to be more aggressive in their provisioning than their balance sheets and their income statements allow them through. In other words, this restructuring of the banking system is going to take the scenic route. It's going to be done on a very gradual basis, and the watchword of both the banks themselves and the government will be maintaining financial stability at all costs. So we're going to take our time over this. Now, I think one of the serious issues, and this is a very interesting graph I stole from the IMF actually last week, is the amount of provisioning in Vietnam relative to other banking systems. Now again, the numbers for Vietnam would go back to summer of last year. So we have seen an increase. I guess at the moment that probably is closer to 20 at the moment. But still, the amount of provisioning is very light. The general provision in Vietnam is around 0.75% of the value of a loan. And there has been very little specific provisioning against loans, except in cases where the auditors have really pushed very strongly for it. So it clearly shows that there's a lot of catching up to do. There are some banks that are doing a lot better than others, obviously, but in general, as a system as a whole, we need about 3 or 4 years worth of quite heavy provisioning before we get to where we need to be in terms of loan loss coverage ratios. Now, a little word on the VAMC. Our feeling is that the Vietnam Asset Management Company, which has been set up by the government to tackle this problem, is at best a partial solution. They will focus on 2 categories of banks. They will focus on the state-owned commercial banks, and they will also focus on some of the smaller, the weaker banks, let's say the bottom 10 banks, who have very serious problems, and where in many cases the NPLs range from, let's say, between 30 up to 60%, according to SBV estimates recently. The rest of the banking sector, which covers about, let's say, 25 to 30 private sector banks, by and large, are not the immediate priority of the VAMC. Now, most of these banks, particularly, let's say, the top 10 or top 12, will be more or less left to their own devices, with the exception of maybe 1 or 2, like ACB, for example, or TCB, which have been invited probably to sell some of their, well, I say sell, asset swap really is the official term, some of their loan book to the VAMC. But by and large, the first deals, which we expect will come in the next 2 months, will probably involve state-owned commercial banks. The reason being that it's very easy to get a state-owned commercial bank to sign on the dotted line and to agree to whatever the terms the SBV and the VAMC set before them. Then once they've set the terms, then they can turn around to the private sector and say, well, the state-owned bank agreed to these conditions, so you also have to meet these conditions. And these conditions include the fact that these baskets of NPLs cannot be bought by the VAMC unless they are backed primarily by real estate. So the VAMC is not going to be keen on taking non-real estate related NPLs. Now that's bad news for some of the smaller banks who don't have a lot of collateral against a significant portion of their NPLs. So people who expect and who hope that the VAMC is the magic solution to all problems, take a step back. It operates to help the state-owned commercial banks get rid of some of their NPLs. It also offers long-term parking facilities for some of the smaller banks, because effectively, in time, they'll take the bulk of your NPLs for 5 years. They'll issue you with a zero-coupon bond, which you then have to provision against by 20% each year until year 5, when the bond basically will be worthless. And you can use that bond and take it to the refinancing window, especially in the first couple of years, and basically get refinancing loans using that bond as collateral. So the VAMC does not take any view on the value of the collateral. It doesn't care. It buys it at book. Later, the VAMC will then turn around and probably organize some auctions whereby they will try to separate the loans from the collateral and sell off the collateral. Now, in the official documentation, the rough estimation for the price of this is somewhere between 20 and 40%. But honestly, nobody knows. We've never done this before. We have no experience doing this. We have no transparency in the real estate market. There's very few real estate transactions that take place. So it's anybody's guess as to what the average value of these NPLs will be. But it'll certainly be an interesting ride over the next couple of years to figure it out. And I'm sure we'll have a couple of surprises along the way. Now, the last topic that maybe I should mention, if only because my friends over the IMF are certainly worried about this, is the extraordinary degree of cross-ownership in the banking system and the amount of inherent systemic risk that brings with it. Now, I think that this is the chart. Now, probably you can't see the individual banks and the individual holdings, but as I summarize this is a spaghetti junction, basically. And this, in a nutshell, tells you that one bank's problems becomes every bank's problems very quickly because of the interlinkages in terms of ownership. We have a relatively small number of corporations, industrial groups, state-owned enterprises that have their fingers in a lot of banking pies. And one of the key challenges for the government over the next 5 years will be trying to untangle at least part of this and consolidate and merge some of the weaker banks, and then probably invite in new money, which by and large will be foreigners, but not in all cases, to take up the challenge of running some of these banks. But certainly, and I leave the conclusion to my colleague and friend over from SSI, the issues and challenges facing the Vietnamese banking system at the moment are quite steep. I think the one thing that we can be thankful for, though, is unlike most other banking crises in Asia over the last 15, 20 years, the funding side is purely domestic. So we don't have these large-scale foreign deposits in the banking system, or by and large-scale foreign ownership in the banking system that could push the system into crisis. So even though this problem will take 3 to 5 years to solve, I think we will probably be given the luxury of having that time, simply because the domestic authorities, the SPV in particular, are able to control the system, are able to keep stability in the system, because we don't have a lot of foreign depositors who are running away with the money, so to speak. All right, that's it for me, and I'll hand over to my colleague here.
Thank you very much. Now, I think it's time to listen to some maybe positive spins, from Mr. B, which trying to actually counter, both of our guests here. Let's see what you can actually convince the audience.
Okay. I get the easy part of the presentation. I'll talk about the opportunities of investing in Vietnam. But you have heard my colleagues talking about the problems in the banking system. Clearly, in Vietnam, the banking system needs recapitalization because my colleagues just estimate that the NPL ratio estimates should be anywhere between 15% to 25% of the loan book are NPLs. So if the average CAR ratio, CAR ratio of the banking system in Vietnam is 9%, technically speaking, the banking system in Vietnam is bankrupt. As a first recommendation for our clients, we recommend to avoid the banking system altogether from your portfolio for Vietnam. If you have to hold one bank or two banks, we have a few recommendations for you, but it's not going to outperform. The problem with the banking system in Vietnam seems like it will drag on for some time. And that would be a reason why the economy of Vietnam will likely be weak for some time. Because the banking system is the engine of development of the economy in Vietnam. Why? Because the Vietnam economy depends a lot on the banking system. Total banks to GDP in Vietnam is 130% of GDP are bank loans. So the other sources of financing for businesses are quite limited. So therefore, in general, small caps suffer a lot because of the banking crisis. They have difficulty in accessing credits. So basically, as a second recommendation, focus on the larger cap stocks because they are better equipped to access credits and to be able to continue to grow. How does that work here? Okay, as a big picture opportunity for Vietnam, there are two free trade agreements which are coming up for Vietnam. One is the TPP, the Trans-Pacific Partnership Agreement, And the second is the AEC, the Asian Economic Community Trade Agreement. Both agreements are supposed to be in place in 2015. This one, the TPP, is quite important for Vietnam because it involves the US, Japan, Vietnam, Australia, and some of the Latin American countries. Specifically for Vietnam, signature of this contract would allow exports of products from Vietnam to the US to be exempted from import duties in Vietnam. Import duties for textile and footwear of Vietnam into the US right now is about 18%. If this agreement is put in place, those duties will come down to 0. However, there is some conditions because of the forward rule in the agreement. The materials of products exported by Vietnam to the US would have to be entirely made in Vietnam. So it represents a challenge for Vietnam textile business. It is estimated that current exports of Vietnam to the US for textile will double from about 15 billion US to 30 billion US when this trade agreement will be put in place. But as you know, in Vietnam, we don't have cotton and we don't have polyester. So we import cotton and polyester. We spin to make yarns, but we export most of the yarns to China. And then in China, they make the cloth, and then we buy back the cloth in Vietnam to make clothes. Once that we have the clothes, then we export the finished garments to the US. So the gaps in the textile business in Vietnam is definitely the cloth making and dyeing factories. And most of those factories are in China. So therefore, we have seen already a number of Chinese factories moving to Vietnam to produce cloth and to dye cloth so that Vietnam products will be, in the next few years, be entirely made in Vietnam and therefore would benefit from the TPP agreement. So there are a few listed companies in the textile business in Vietnam which already outperform in view of this upcoming agreement. Oops, I turned it off. Okay. The second free trade agreement is the AEC, the ASEAN Economic Community. You already know about this agreement, which promotes political, social, and economic cooperation between the ASEAN countries in 2015. And the 12 priority sectors would be agriculture, air travel, automotive, electronics, fisheries, logistics, healthcare, rubber, textile, and wood. And all those areas, Vietnam excel in those areas. So definitely AEC, as led by Thailand here, would benefit Vietnam a lot. And we already see many Thai companies already starting to invest in Vietnam. CP, for example, is a big player in Vietnam already in the agricultural business. PTT is building the third refinery in central Vietnam at the cost of $5 billion US. Amata, the industrial park company, is doing so good business in Vietnam that Amata Vietnam is thinking about listing in Bangkok here. So there definitely we have seen a number of foreign companies developing manufacturing facilities in the industrial parks in Vietnam to benefit from the upcoming those two free trade agreements. So as a result, FDI's inflows into Vietnam have been quite consistent at the rate of about 12 to 13 billion US dollar a year. And the reasons why Vietnam continues to attract FDIs is mainly because of the low wage rates in Vietnam. Factory workers in Vietnam earn about 50% less than in China, and certainly cheaper than in Thailand, Philippines, and Indonesia. The biggest investments by foreigners in Vietnam recently have been in the electronics and mobile phone parts sector. So because of the problems in the domestic banking system, Vietnam economy so far has been surviving mainly thanks to the foreign invested sector. So those are the international manufacturers who invest in Vietnam in order to take advantage of the low wage costs in Vietnam and also the low electricity rates in Vietnam. Electricity rates in Vietnam is about 40% cheaper than in Laos, Cambodia, and China. So we have seen recently Samsung, LG, and other Korean and Japanese manufacturers of electronics, parts, and mobile phones developing new plants in northern Vietnam. The Koreans love to do business in Hanoi. So they have plans to build the second biggest Samsung plants in Hanoi at the cost of $3 billion US. LG is trying to do the same in Haiphong. So typically the industrial park companies such as KBC, which we recommend to our clients, are doing good business in northern Vietnam, serving those international manufacturers and all the support industries which go with it. So in general, the economy will remain weak at maybe less than 5% in 2013. But the good signs are the trade deficit in Vietnam going down because of the weak economy. Exports continue to do well, whereas imports have been weak, mainly because of weak domestic consumption. But the fastest growing sectors of exports definitely are mobile phones and parts. So you loved your Samsung S4 phones, right? Very strong likelihood that a lot of those parts or even the phones themselves are assembled in Hanoi. So the biggest exports of Vietnam currently is no longer textile, it's no longer crude oil or seafood, but it's actually electronic parts and mobile phones. Second biggest exports of Vietnam are textile, typically will double with TPP agreement, whereas the crude oil exports continue to be a major source of export revenues for Vietnam. So in summary, back to the banking system, we believe that recapitalization and operation of the VAMC will still take some time to be effective. So therefore, we recommend to avoid the bank stocks. The bank stocks and non-bank financial stocks have been the weakest performance of the stock exchange in Vietnam the last 12 months. The reform of the banking sector has to go hand in hand with the state-owned sector because the SOE sector in Vietnam accounts for about 50% of the credits in the banking sector, and 35% of the bad debts in Vietnam are related to real estate. So banking sector problem is related to SOE problem related to the property sector. So if you invest in Vietnam, avoid anything to do with banks, real estate, and SOEs. The PE ratio of the VN index lately has been about 11 times after this recent drop. So some of the good stocks that we have been recommending have been dropping as well because of the tensions on the international geopolitical system. So we recommend basically to overweight consumers, which are still the biggest story for Vietnam. The population of Vietnam is young, 90 million people, growing net by 1 million people a year. The average age, the median age of the Vietnam population is 27 years old. So anything that consumer product companies sell to the young population, such as milk, technology products, internet services, will do very, very well. So we recommend the dairy companies, the pharmaceutical stocks, and the energy and utility stocks. We recommend you to avoid financials and real estate, whereas some of the materials sector also do fine. So that concludes my presentation, and we'll now open for Q&A. Thank you.
Thank you. I just have one question because, all you guys actually sound not so positive about the banking. Let's begin with you, Steve, on this kind of, landscape and solution that you have seen so far. How long do you think that the banking reform would take, and, and what would drive it, in your view?
So the positive steps have already started. The SBV knows, the State Bank of Vietnam knows that a strong economy, or one of the ingredients for a strong economy, is a strong banking sector. So the first steps have already been taken. So I think that's a positive sign. So I don't necessarily think that, even though I'm not from the broking side, from the sell side, that investing in Vietnamese banks is a bad idea. Recently, Vietnam Bank was 20% purchased by Bank of Tokyo Mitsubishi for 2.5 times book, which is expensive in my opinion. But they bought 20% of the bank for $800 million. So deals are being done at the strategic partner level. And also on the brokers can talk about more about this, but on the institutional side, there's definitely funds looking for a home in Vietnamese banking at the right price.
Okay. So, Pete, what do you think, how long, and if you were in charge in terms of banking reform, what would you do, basically?
Let me tackle the question from a slightly different angle. I think the first mistake people make is to look at all Vietnamese banks and say they're all the same.
Yeah.
They're not, clearly. There are good banks, there are less good banks, and then there are bad banks. The two best banks, and again, just looking at it from the point of view of the current NPL crisis, and asking myself one question: how quickly can this bank get back to normal lending activities? How quickly can it have, let's say, a real NPL ratio of less than 5% or less than 4% or so? I would say the two best placed banks to achieve that, and I would put a timeline of, let's say, somewhere in the second half of next year, would be Military Bank and then Vietcom Bank. In terms of which banks might follow suit in 2015, then I think that there are a couple of other listed banks, for example, CTG, Vietnam Bank, that may well get back to kind of normal-ish operations sometime in 2015-16. I would also say that Asia Commercial Bank, ACB, it still has a lot of work to do, but I think it can get back to normal-ish lending probably sometime in 2016. And then amongst the other banks that are either listed, and in this box I will also put TCB, Tacom Bank, which although it's not listed directly, is listed as part of a conglomerate called Masan Group. I think that will take probably at least 3 or 4 years before it can get back to normal operations. And I would also put Sacom Bank into the same category. Now, I think I've probably covered most of the listed bank there. The only one, maybe Saigon Hanoi Bank, is probably going to take a significant time to get better. Exim Bank was the other bank I forgot to mention. I would put it roughly in the same category as Asia Commercial Bank. In other words, it'll probably not get back to normal operations until 2015 late or 2016 early. So that's my kind of timetable for how these listed banks will get back to normal operations.
I think that what might expedite the process as well is if the foreign ownership rules are relaxed for investing into the banking sector, where it's capped at the moment at 30% for any 2 strategic partners, and individually at 20%. If these are relaxed to allow foreign ownership of local banks, I think that would expedite the process and speed up the recovery.
Would that help, to, remove the more recommendation, on the banking sector?
Yes, definitely agree with my colleagues. Because the recapitalization is urgent for the banking system in Vietnam, and there's no money in the country to finance that, because the government already said that they would not use public funds in order to bail out the banks. So the only sources of money will come from foreign investors, and to do that, the government would have to relax the foreign ownership limit rules in order to allow them to come in, to inject capital in exchange for control management, because management control of banks by professional bankers is urgent. Most bankers in Vietnam, they were entrepreneurs, and they have less than 15 years of experience in banking, and they have never heard about asset management or debt management as they try to do now. So we need very experienced, seasoned bankers to run the banks, to turn them around, with the help of foreign capital. And that has to be done in parallel with what's going on with the debt trading activity going on, because the VAMC will help only on the part of resolving the existing NPLs, but after the NPLs have been sold to VAMC, there will be a big hole in the balance sheet of the banks, and they need to plug that hole with new money.
Mm-hmm. Besides these foreign ownership limits and also this VAMC, what else do you think it needs to happen before we can actually looking at Vietnamese banking again?
I mean, I think really it's a very simple game of once you have a mechanism for either provisioning against or selling off your NPLs, once they also have identified who is going to recapitalize the banks. Is it existing shareholders? Is it new shareholders? And in some cases, I would say that, for example, in the case of Military Bank, and possibly to some extent Vietcom Bank, it's arguable that they don't need to be recapitalized. So not every bank in Vietnam needs to be recapitalized. Most do. Some will probably have to be recapitalized several times over, but it doesn't necessarily mean that all of them do. So my sense is that you have to really look at this issue on a bank-by-bank basis. A lot of the systemic risk through the interbank market has already been dealt with. So if a couple of small banks get into big trouble, it's not going to bring the whole system down. That was a risk in 2011-12. It's not a risk today. And I think that the nature of the operations of the VAMC will become very clear by the first half of next year. We'll probably have some auctions by the summer of next year. We'll get a clear idea on what the pricing is. Now, I expect the pricing to be fairly low, maybe 20, 30 cents on the dollar to begin with. But once we've identified what the average price of the NPLs is, then we can start talking about how much of a recap is really necessary. Because it's still quite early on in the process, and there's a lot of unanswered questions. But my guess is that by the summer of next year, we'll have a clear idea of how much it's going to cost, how much money is required, and over what time period. And once we've gotten there, we're going to start asking ourselves questions about who's going to be the supplier of this capital. And I think foreigners have a clear key role to play. But I also suspect that the government will, at the end of the day, have to put its hand in its pocket as well. And I think if you look at some of the details of the VAMC charter, you will notice that it allows for the possibility of debt equity swaps, which I think is a hint that the government already recognizes that it has a capital part to play in some cases.
Okay, so in interest of that, at your work, have you seen any interest from the foreign side in terms of trying to maybe to look at the strategic partnership in Vietnamese bank? Any interest at all at the moment you've seen?
There are definitely foreign banks from Europe, from US, and also from Asia looking to find a home in Vietnam within the banking sector.
Yeah. What had been in terms of negotiation? What kind of demand are these foreigners had with the investment that they want to do?
Well, it really depends on the size of the bank and how much the bank wants to sell. But it could be up to 300, 400 million.
Okay. So is that any demand in terms of ownership, like control?
So that would only get them up to 20%.
Sure.
Yeah. I would just say also, I think the government in Vietnam recently, in the recent past, has kind of shown that it hasn't been that willing to dip its hand in its pocket for government-owned entities. I think the banking sector might be a little bit different, but it certainly walked away from some of its obligations, well, perceived obligations, in relation to some fairly high-profile state-owned companies.
Okay. As we know, banking and real estate is actually tied together. And you comment a little bit about other sector. Can you actually share your views about what you think about real estate in Vietnam at the moment and what kind of outlook we can You see so?
Yeah, it's a good question. Property prices in Vietnam have gone down a lot. I remember about 6 years ago, commercial real estate in CBD, Ho Chi Minh City, was 40% more expensive than CBD in Bangkok. Today, it's about 10% cheaper than in Bangkok. So Bangkok has gone up, and Vietnam have come down since then. So certainly it's more attractive now for the mall and central group to explore opportunities, for example, in CBD in Ho Chi Minh City than 6 years ago. But on the residential side, luxury apartment prices have also come down at about between 30 to 60%, depending on which segments of the market we are talking about. But definitely luxury prices, flats have come down. The low-end apartments, however, have kept their prices up and have reduced much less than the high-end residential flats. Industrial properties such as industrial parks are turning around, as I said, in certain areas such as in northern Vietnam and at certain companies. But some of the southern companies still suffer. So yes, in general, Vietnam property have become a bit more attractive. But on the residential part, consumers still are not very confident about the economy. And therefore, they are still not buying much residential flats in Vietnam, although that the demand for residential housing is huge in Vietnam, especially in the low-end segments of the market. Yes, to answer your question, certain sectors of real estate seem to be turning around, but in general, it's still quite tough.
Would you agree that we see some light in the end of the tunnels in some sector in real estates?
Yeah, I mean, I think one of the most interesting developments that I've seen was actually on August the 20th, when the government published a circular which begins the process of privatizing pension funds in Vietnam. Now, this circular will come into effect at the end of September. Now, if you have a pension fund market, and I think it will take several years to develop, then you suddenly have a pool of long-term savings. You have more and more investors that want to buy long-term bonds, let's say 10 or 15 years. Once the government starts issuing long-term bonds at 10 or 15 years, you go out the yield curve, then banks can start issuing long-term corporate bonds themselves. Once they have more long-term capital, then they can start issuing mortgages of 20, 25 years instead of 15 to 20. So I think you get where I'm going with this. I think it will take 5 or 6 years before we get a mass real estate market in Vietnam. But when it happens, it will probably be the most interesting development of the next 20 years.
Well, thank you. But besides, talking about banks and business, I think both you guys actually choose Vietnam to be your working place and your living. So you actually must see something, positive about Vietnam. Can you share what else you can look for in terms of, being in Vietnam?
Look, I think it's an exciting place to be, even with the current economic trouble that it has. I think it's an exciting time to be a foreigner in Vietnam and look at the development of a developing country. There's not too many more in Asia that are underdeveloped, and Vietnam is a very fast-growing country. I mean, outside of China, show me another country in Asia that's done so well in the last 15 to 20 years. I mean, there isn't one. So, it's come from a remarkably low base and come very far in a short period of time, but still has a long way to go.
How about you? You see why you choose Vietnam as your, you see any?
I lived in Thailand for about seven or 8 months.
Right, yeah.
I used to live in Japan for quite a long time. And on my first trip to Vietnam about 9.5 years ago, I remember I landed in the airport, I came out, I took a taxi, I went to a hotel which was around 5 minutes drive away from the airport. I looked out the window and between the airport and the hotel, I decided that I wanted to emigrate to Vietnam, which I did 3 weeks later. I've never regretted it. It's the best country in the world to live in. And I think I would put it down to the extraordinary dynamic of the people. Everybody I work with pretty much either is an entrepreneur or wants to be an entrepreneur. I also have my own business, which is completely separate to the brokerage industry that I work in. And that's very common amongst a lot of my friends, both Vietnamese and foreign. And that kind of dynamic translates into a tremendous growth opportunity if you look at Vietnam over the next 10 or 15 years.
Okay, Mr. Bich, with your last word.
Yeah, I agree that there are many opportunities because it's still quite underdeveloped, so there are a lot of things to do. Like my friend Fiachra, I also have my wife has also a business of serving financial institutions to sell things such as credit cards and insurance policies, and it's growing at 100% per year. Because the retail banking business in Vietnam, for example, is still very much underdeveloped. We have 90 million people, but do you know how many credit cards do we have outstanding in Vietnam? Can anyone guess the number?
1 million?
5 million, yeah. Who would like to guess the number of credit cards outstanding in Vietnam? Only 1 million. Yes, so the potential for growth of credit cards is huge, because one day the young consumers in Vietnam will spend and use plastic, like here in Bangkok or in Hong Kong for sure. So there are many examples like that, which are quite interesting for people to look at.
Thank you, and thank you all for joining us for our banking session. So you hear lots of issues, and end up with a positive note why these guys actually chose Vietnam. So thank you very much, and thank you our guest speaker who flew from Vietnam to actually join us.
Thank you very much for the insightful session from the panelists. May I ask panelists to stay on the stage for the photo session? And the final session today is property in Myanmar. So we're going to discuss whether it's in the boom or bust or both stage. Our panelists are following: Mr. Tony Picon, Managing Director from Colliers International Myanmar; Mr. Cyrus Pan, Executive Director and Head of Real Estate Division from Joma Strategic Holding Limited; and the moderator is Mr. Lee Miller, Editor-at-Large, Bloomberg News. But the last session of Thailand Focus 2013 will start shortly, and we are waiting for the readiness of the speakers and also our team. So we can have a quick break for 5 minutes, and we'll come back soon. Thank you very much. And the photo team, please come on up on the stage and take the photo from the panelists. Maybe gone.